In my last video, I looked at the dollar and the effect that it's having on stocks and how it's more important than anything that you're seeing that's negative in the news that might change your bias. If you just look at the Fed's actions, it's easy to see that all this other news doesn't matter unless there's something that really surprises the markets like it did in March. But still, traders remain negative and on the wrong side of this, or on the sidelines, or short. Um, so due to the constant barrage of negative news that they are applying to the market, and they just shouldn't take that course. So devaluing the dollar, as I discussed in my last video, has the same effect on commodities and precious metals. They've been correcting since August and under pressure, and they look like they're ready to start a new phase higher now. So this is the long-term chart back to 2012 of gold, and it reached highs on a monthly basis here, and that's what I've been watching is monthly closing price, which we came down below, got me very nervous, but it has recovered and it looks like it's completely swinging back. So focusing in on the current situation, this is the top where we saw a massive move this summer that needed time to correct. And all things considered, this hasn't really been that big of a pullback. If we look at the weekly, this move went from under 1,500 when we had the big sell-off up to 2,100, and it only came back down to about 1,800, a little bit below there, testing the 50-day moving average, or sorry, that's 50-week moving average. And like I showed before, it looks like now this is holding for that long-term breakout. This was a breakout, a retest, and now I think we're ready to move higher based on how this seems to be trading. I'll get into a few specific examples. So previously, this was not able to hold its 50-day moving average. It did have a strong breakout, but then an even stronger reversal. So I did get long here and had to, take a small loss here after that overnight move. But I saw traders remain bullish through here and still trying to buy. And moves like this are often a, final sell-off event that get people on the wrong side. And I don't think many people caught this move out of this bottom, but I did. It's, been a little touch and go, and I think it still will be. We're not going to go straight up. It's not going to be easy like people want it to be, but this does look like it's moving in the right direction and will continue higher. So what I'm looking for next is a test and break above this level where we turned around last time, so around 1950. And it shows silver, we're already seeing that there. So this is silver. The correction has been even less in silver. It's been extremely strong, even though silver has not broken all-time highs. But I do think that silver is going to catch up and have a much bigger percentage move than gold. So the lowest downside we saw earlier in late summer was here around 23. The breakout that we had looked good, but then came all the way back down. But still, this is not as extreme as what gold saw. And then that big sell-off that gold had, you would have expected this to come back down. And I've seen a lot of people talking about this, that they want to see 20, they want to see 19, they want to see something bigger than this, but the buying pressure is too much. And it only was able to cause a 1-2 day undercut of these prices earlier this summer. And RSI here is looking stronger than it was there, and I think this is the type of divergence that I look for. It's also broken out higher than what we saw when we're looking for in gold now. It's already happened in silver, and I think this move here is imminent. It's not going to happen immediately. It might, but I don't think it will be immediate. It might need to consolidate here for a little bit. It might need to come back down and take a few days, but I do think that we will be moving to around 30 sooner rather than later, and that will continue into next year. So don't get sucked into all of the negativity that you see in the news. The Federal Reserve's actions are pushing the prices of stocks and commodities higher, and they aren't going to stop. If anything, their actions are going to get more extreme, and it's going to drive these trends that we've seen for the last year since March even higher. So until the market reacts negatively to their interventions, remain cautious. Always be ready to get out of the market if something doesn't go right. But stay on the long side until something like that happens. But you can't foresee these events coming, so don't try to time what you think might happen in the market, in the coming days. If you like this post, please give it a like and subscribe. Always do your own research and make your own plan. Good luck.